Good morning, everybody, and happy Friday. Today is January 16th, and this is pre-market review. Those of you that are new, hit that subscribe button so you can get future notification. Hit that thumbs up button, like this video, and also, if you're new, you can go down in the description and join the Discord community for live trading from 8:30 a.m. to 10 a.m. Central Time. As every morning, we start out with economic data. There doesn't seem to be anything earth-shattering on the books for today, which is good. So we could see a little more choppiness again for today. That's pretty much been what's been happening since the beginning of the year. It has been grinding higher, though. Let's start with the ES, like we normally do. Hey, good morning there, Anthony. See here. So looking at a 4-hour chart on the ES, dating all the way back here since August of last year, it's grinding higher. You did have that little blip here in November. I think that was a glitch that had to do with the crypto market. But for the most part, aside from that little blip there, it has been grinding higher here. So going over our regressional trend line here, this green, white, and red is a regressional trend line that I started from August here, right? So the green is the lower end, the white line is the midline of it, and the red line is the upper end of the regressional trend line. So we use these levels as guidance for when we get into the actual day of trading. So I start with the 4-hour, and then I start into the 15 minutes. So you could see yesterday in our pre-market, we spoke about this level here, which was the previous all-time high, 7,014, which came in exactly at the mid-range of the regressional trend line. And I said that that was going to be an area that you're going to get a little resistance. So when we were doing our pre-market yesterday, we were talking right here. I said that in order for us to move higher, we're going to have to get through here. I anticipated us to get a little resistance right off the bat here first. And then if we were going to get a break above that and hold, then we could push towards all-time highs at 7,036.25. As you can see, we rejected that level, still like a rock star. You could see up here, there's still it's still very heavy. However, we did come down here and we're still holding this 69.77.75 level to 69.70 and a quarter level. So that's where it came down to yesterday afternoon, and then right now pre-market is holding. So I like those levels. If we did lose that 69.70.25 level in regular trading today, next level of support I'd like is at 69.54.82. If we lose that, the next level I have down there is 69.35 and a quarter. If we lose that, then I think we come back down here at some point to that 68.72, which is December 18th's high. And it also comes in with this lower end of this regressional trend line that I have. So I respect these trend lines here. So they do come in. And so if you're trading futures, mark down these levels that I have here, and you can use them during intraday trading here. So let's get over to the NASDAQ. Again, if you're new, hit that subscribe button, smash that thumbs up button, like this video. And then also join our Discord community by going down in the description down below. And for live trading from 8:30 a.m. to 10 a.m. Central Time. So let's go into the NASDAQ. NASDAQ is, it's being it's definitely lagging due to the Mag 7. But I think that it's lagging right now, but at some point it's going to catch up. So this is it's grinding higher too. And then here, of course, this is that November blip that we had. But it's still grinding higher, but it's not really performing like the ES. And it's due to tech is, tech is definitely in the back seat for the time being. But, you can't really put tech in the back seat for too long in my eyes. I mean, the world is not going anywhere without technology. People may be shifting their portfolios right now temporarily, going into small caps because of the dovish Fed on the horizon with lowering rates and such. So that's good for short term, but you know, the biggest bang for your buck is probably going to be for technology. But that being said, it's not for the faint at heart either, because it's definitely the most volatile when it comes to semiconductors and your Microsofts, your Apples, your Teslas, of course. But anyway, so this is the 4-hour chart of your NASDAQ here. And you can see this is the same thing. I've got a regressional trend line. It respects these lines as well. This is November here, or actually this is December. So December popped down here. This is November right here. Yeah, this is that November 20th blip. We popped above it, and then we got above that trend line. You can see how it's supporting it here on January 2nd, and then again here on the 14th of last week. So it's a bullish pattern here. It may be choppy, but it's definitely bullish, and it's moving higher here. We have to definitely hold these levels here. So going into today, if you are trading the futures on the NASDAQ here, I think it's important, which it is right now, holding this 25,803.25 level in order for us to move into that 25,935.25 level, which it respected it like a champ yesterday. You know, these levels, I did not make these, I did not put these levels on today. They were here from yesterday. You go back and watch the pre-market, go back and watch all my pre-markets, and you'll see these levels if you mark them down. I very rarely move them unless we have a breakout of new levels. Maybe I'll adjust them, but for the most part, these levels are on here for quite a while, right? And a lot of these levels that I have on here are weekly highs, monthly highs, and then occasionally I'll do some intraday, you know, 15-minute levels and see where the market responds to it. Like, for example, like you can see right here, you know, this January 13th low, which is right here. So you can see right here, you can see how it respects at certain levels. It got it had a rejection back here on the 9th. We broke through it, came through it, and then it supported it here. Came back down, lost that level, then popped right through it, came here, and then supported it here, lost it. So this low then became a resistance level, came through, popped through it again. Then the resistance level became a support level. So this level is a meaningful level right now. So now you see in pre-market, it's holding this level. So you can trade off of these levels. You can have a bias. Okay, I'm going to take a long from this position and try to take it up to December 26th high and have my stop. You know, you kind of put a gauge in where your stop is going to be. Maybe put your stop, you know, pretty tight there, 25,781.69, right? And you have your tight, good entry right here with a big upside, right? Maybe you could have like maybe a 5-to-1, 6-to-1 ratio on that, and you know, you do that. You don't have to have an 80 to 90% win rate on something like that. You need to have like a 30% win rate on that if you have that kind of trade book where you're having a 6-to-1 ROI, right? So, you know, for those of you that are kind of beginner traders, maybe that's a little bit advanced for you, but I can go over that in more detail. So if you come to the trading room, you ask questions, I can definitely elaborate on that. Also, by the way, if you have different stocks you want me to go over, leave the comments down below, and I'll be glad to make a video on that and give you different price levels. What I try to do is I try to keep things nice and short and sweet, go over the broader markets, go over Tesla, and then from there go into a short little trade strategy, because I can do levels pretty much on any futures market, any foreign currencies. I trade foreign currencies for about 4 years, and any equities as well. So I could pretty much be on here for 8 hours and go over levels. So if you do want me to go over certain levels, leave a comment down below. I'll be glad to make a separate video for that as well. So let's go over to Tesla right now. Again, if you're new to the channel, hit the subscribe button, smash that thumbs up button, like this video. Let's get to Tesla right now. Tesla. So Tesla, I thought we were going to finally make a run yesterday on Tesla. So here was Tesla yesterday. And it was extremely wicky. This is a 15-minute chart here. Look at these wicks, for pretty much most of the day. I mean, this is the first hour of trading right here. Look at up and big rejection, right? And here is the 50-day SMA, right? And I said that in order for Tesla to really move higher, we were going to have to break and hold above it. And so right here, at an hour after the market was open, we finally broke with some decent, even though they were still wicky up here, right? We finally broke and held above it, and I thought we were finally going to break and then make that move. And then let's get over our point of control levels. Let me see here. Let's get to all clean. Maybe this is a little better here. So, yeah, we hit that one point of control that was open from January 9th. So this was open here. So we close that level out. So I'm going to remove that point of control. Those of you that are new, I have these point of control levels that I leave open. And actually, this one is closed. So what happens is I have an automatic script on here so that you see this long dash yellow line, and it plots a point of control level where it's an average on where the heaviest volume was traded. So it plots that price where the heaviest volume was traded. And so now what happens, and it definitely created some point of controls for us yesterday, but what happens in the point of control is if the market does, after the market closes, if it doesn't come back down and hit this point of control level, I leave this level open. So we do have some levels that are open above here, and I'll go back and I'll show you if you're new. Here, something very close. There's one level from yesterday that's open. So this is what I'm talking about. So the market closed. Here was a point of control level from yesterday, okay? So you can see this is the close of the market right here. And you can see if the market doesn't come back up, if the price doesn't come back up and touch this level, this to me is a level that's open. And so now I'll come here, I'll mark this, I'll mark it with the date, 15/20/26, point of control. And now I'll plot this here. So now when the intraday trading starts, I know that this level, you could trade it a bunch of different ways. One, that it's going to be a magnet, that the market's going to gravitate back to that level. Okay, but the problem with that is these levels get hit, but you never know when they're going to get hit. I've had levels up here that sometimes they don't get hit for 9-10 months, right? Another way to make this trade is using it as a support and resistance levels, meaning that if the market comes back up here, you're going to get a resistance. You're going to get a reaction here, meaning the market comes up here, you're going to get some selling that comes off of it. So you can put, have a trade bias up here. Okay, I'm going to take a short here and have my stop. You know, you can make your stop wherever wherever your threshold for pain is. You could have your stop above the 50-day SMA. Right, so there's all different ways you can base a trade strategy off it. However, these point of control levels that I have up here, they're pretty powerful, and the market seems to gravitate back to these levels. So we have an open point of control yesterday from 442.43. So I like that level. That means to me, I'm liking that the market potentially could come back and hit that level today. Not only do I like that level, but I like this as a hold is 439.74 if we can get that hold. Why do I like that? Because this is a January 2025 high that we had here. And that means that if the market breaks through a certain level, comes back down here, it's considered a break and retest if you hold this level. It doesn't always happen that way. Like, for example, so you see we broke this high here. And I'm trying to see when that high was. I think that was all the way back in January of a year ago. That was the high. So that's going to be a pretty significant level if we hold that today, right? So we broke that level, came back down here, tried to hold it here towards the end of the day yesterday, lost that level, and then regained it in post-market yesterday, came back down here in pre-market today, and still holding that level right now. So to me, if we hold this level, this could be a great long entry, right? So you take a long here, and then you could have your stop, anywhere down here at this level saying, okay, well, it's losing that level. I'm wrong, right? But for right now, this could be a good long entry, but we are still in pre-market. Anything can happen, right? So there's all different ways that you can make your trade. So now if we look at let's look at the SMAs right now. We did try to get above that 50-day SMA yesterday that I was talking about. I thought we were going to get it, and then we lost it. So this level is still a thorn in our butt here for Tesla to get above. So we have to, in order for Tesla to move higher, I am not going to be really comfortable with a good, solid long position until Tesla gets above at least this 443.21 level and hold. So if we close above that 443.21 level and hold today, I'll be comfortable that Tesla can start moving higher and start getting towards these other open point of control levels that we have up here. We have an open point of control level from January 5th at 455.09. That's still open. We have an open point of control up here at 478, I believe. Yep, 478 from December, from Christmas, day after Christmas last year. That's still open. So these are all higher levels, which I'm pretty confident about. I like that they're still open. That's good. However, there is downside here. We are still holding. We are below all these SMAs. We're below the 20-day SMA, so that's bearish. We're below the 50-day SMA, so that's bearish. So, in order for Tesla to start moving higher, we have to start recapturing some of these SMA levels. So right now, my bias on Tesla today, I don't necessarily mind a long. I would say that here's yesterday's close. Maybe take a long at this 439.20 level. If we hold that level, I wouldn't mind a long, or maybe even a long here at the 439.74 level. Or you could take a long here at 439.74 with your stop below the close from yesterday. That could be all different ways to play this coming in. If you lose those levels and with some powerful selling, then you're going to be wrong, right? So you gotta be careful on. Wait, is this the close from yesterday? Yeah. So this is the close from. Excuse me. This is the close from Thursday. So you could use that level also. So we'll put down here one. Okay. So this is Thursday's close, and this is yesterday's close down here. So there's a bunch of different levels here that you may get some support, right? So I do like that pullback longs today on Tesla, and also depending on what the market's going to do, what the broader markets are going to do today also. So, but sometimes Tesla does its own thing, so you got to definitely trade what the market's going to show you. So let's get into the 5-minute opening range trade from yesterday. Again, a bit of a chop fest like we were going over yesterday. You really didn't get a good move until later on in the day. I think this was 1:30. You finally got a break of that 5-minute range. Like I was saying, look at all these wicks. Very difficult to trade on those days. I was very fortunate yesterday. Made my money early. I made some decent trades. I was kind of in tune with the market yesterday, and then I got out of this chop fest, right? So going for those of you that are new, we trade the 5-minute opening range trade, and we use the first 5 minutes because if you look down here, this is where your volume is. The first 5 minutes is your heaviest volume of the day. And so this is a script that I have on here where it plots your 5-minute range. And then once the 5 minute, this starts developing as the first 5 minutes is trading through the day. And then once the first 5 minutes is done, then this stays stationary the rest of the day. And so then one trade that we go over in the trade room is a 5-minute break. So when this is developed, if the market breaks one way or the other, you take a trade, right? And you're not necessarily on the break itself. There's more to it than that, but that's the basic concept. So the range yesterday was 440.90 to 444.71 was the range. Then you got a little break, about almost an hour into the market, and we got above that 50-day SMA. So I thought it was a good way to go higher there. You could have taken a trade right when you broke the 50 into the break of the 5. I think I made trades yesterday, both long and short, right? So, but you didn't really get that good follow through break. You thought you were getting a break here at 9:05 when you broke the low, and you got a low. What did you get break there? You got maybe a $1 break there, so you could have made a little money on that, but then it quickly wicked back up here. So, but you didn't get a good structured break here. And what I mean by structured, it wasn't wicky. There was a good solid candle through here. You did pop back up here, and then you got a good follow through here, right? So you got a break of this level, a retest right here, and then a good follow through, right? So this is what I call good structure. This right here with the wick, this is a disaster to trade options with. It's just a nightmare back and forth. Very tough to trade in there. So how do I monetize this, right? So from here, I have my options, and those of you that are new here, I trade weekly options expiration. So today I'm trading 0DT, 0 days to expiration. So it's today's expiration date. And as I get closer to expiration date, which is today, I have my strike price almost right on top of, if not in the money from the strike price. And what do I mean by that? So Tesla, for example, right now, Tesla's trading at 440.16. So my call price I'm going to have on the board for today is today's expiration date, which is January 16th. And the call price is $440 a share, or $440 strike price, which means my premium price is going to be moving pretty much a dollar for dollar when the equity price is moving. So if Tesla's going up, and I think it's going up, and I buy a one lot here, and it's let's say it's at $3, and it moves up, and I buy a one lot, and I sell it at 305, I make $5, right? So for every dollar that Tesla is going to move up, this premium price should move up a dollar. Maybe maybe not quite a dollar today, but close to it, right? Maybe like 50, maybe anywhere from like 60 to 70 cents. It'll move up today because it's today's expiration, right? And so same thing on the put side. I'm going to have a 440 put with today's expiration on it. Now on the puts, the premium closed at $4.20, right? But if you look, we closed at 438.57. So right now we're about $2 higher. So this premium price, because it's a put price, meaning that I want the price to go down, and because we're opening up higher, this premium price is going to open up lower. I anticipate that premium price will probably open up in the threes, maybe low threes. I would probably say both these premiums are probably going to open up very similar. They'll probably both open up in the threes, maybe the low threes. So I'm going to start out this morning trading this. Now, what happens today, because it expires today, when it comes to options, there are Greeks. So you have deltas and you've got thetas, right? The delta means for every dollar that the equity price moves, the premium price is going to move. And theta is time decay, meaning that because it expires today, that these premiums are going to devalue quicker than they would on last Monday, because they have more time. Last Monday, they won't move as volatile as they will today, because Monday versus today, they had more time to mature. Today, they're going to expire today. So at some point, one, if not both of these strike prices could end up at $0, right? So you have to be careful on trading today. You want to make your money, and you want to get in and out of these trades. So what I typically do on a day like today, if I am stuck and I'm still trading after like 10:30, 11 o'clock, I'll probably then switch my expiration date to next week's expiration. So maybe about 11 o'clock, if I am still trading, which I hope I'm not, I'll switch my expiration date to January 23rd on both the calls and puts. So the premium prices, because I'm going to give myself more time, the premium prices will be more money. However, they will not deteriorate as quickly as today's premium prices. So anyways, if you come into the trading room by going down in the description and join the Discord community, I could go over any questions you have while I do live trading. So when I do the live trading, the screen that you're looking at right now, this is what I have up on the board, and I execute live trades. I call out when I'm taking a trade, why I'm taking a trade. I call out where I'm taking my stop. As a matter of fact, one thing I went over yesterday in the trade room is the first thing I look at when I'm taking my trade is not how much money I want to make on a trade. It's actually the complete opposite, is where am I getting out of this trade if the trade goes south on me and it doesn't go in my direction. You always want to identify your risk when you're taking a trade. That's the way you stay in the game. Anyways, again, if you're new to the channel, hit that subscribe button, hit that thumbs up button, like this video. And again, go down in the description area and join the Discord community so you can come into the room for live trading at 8:30 a.m. Central Time to 10 a.m. Central Time, where I go over basic trade strategies along with some other advanced strategies as well. So if I don't see you in there, everybody, have a great trading day and have a great weekend. And on Sunday, I will make a market ahead review for next week's trading. Have a great weekend.